New week. Had a holiday yesterday, Martin Luther King Day. Now we come into Tuesday. And what's a driver? We couldn't have said this Friday, but this coronavirus out of China spreading. It's knee-jerk bearish for stocks and bullish for bonds. You got to know that. Who cares if it might be, there might be overexcited about it or sensationalizing it, or it's going to be like the swine flu and some of the other. Doesn't matter. SARS 17 years ago. Doesn't matter. What matters is, on the surface, in the beginning of this story, it's going to have some effect in the market. What I'm preparing guys for, both in the trading room and the YouTube channel, is make sure you anticipate any other driver or any other comments that come down the wire that could be bearish based on it spreading, but most importantly, if it surfaces in another country. When and if that comes, it's going to be knee-jerk bearish for stock indexes and bullish for bonds and some of the flight to safety ancillaries, at least on the surface, and then it might recover. But there's opportunity if you're in front of your screens and it's, in the middle of the day or even overnight markets are thick enough. Just understand that that's what's driving the market, at least today, maybe tomorrow, maybe for a week, maybe for another hour. I don't know. But I'll show you where it's helped create either a saving money or executing your opinion. We had profile guys in here, and there's nothing wrong with profiling. The problem with profiling is qualifying the trade and the opinion that the profile might give you. So this yellow line I just drew was essentially some levels from Friday, value area low, pretty much on volume and TPO, time and volume, around the 22, 23 even area, 21.5 area. So we go up there once. We go up there once in there. We go up there twice in there with several rotations, 3 times, and the 4th time is the charm. Now, these are tests, the circles, and then there's rotations within the test. And the difference is a test usually has some time in between the test. And then rotations are just part of the second test in there, part of the third test in there, part of the first test back in here, right? Now, drilling down into why we got bearish in here and why it got bearish and didn't go up in there. Number one, we had the bottom of this getting taken out, but also finally I'm going to drill down some green edge zones that were getting breached. In here, we had some remarks that they were finding it in different parts of China, this coronavirus. New cases, new cases, new cases. All right. So let's go in here to a new service that we use, and we'll drill down into the China government reports 5 new coronavirus cases in Beijing, 9 minutes after 9 Central. Let's blow this chart back up. We get that 9 minutes after 9 Central. That's where it's right in here. No coincidence that the market went from probably bullish to rally like it did here to bearish, to have to come off and create a little shakeout. That's where news could change the market. The other thing is, for profilers that don't sell value area low from a previous day there, they don't sell it there, they don't sell it there, they miss it on the third one, they sell it here, and this is what they live with. That's generally what happens with good profile trades. You miss the winners and catch the loser, whether it's in the same trade or it never gives you another chance to come up because it just comes up close and then falls off. When it works, you miss a lot of those. When it doesn't work, you're going to catch almost all of those. A lot of profilers are weak in executing in there or weak in executing in there because they'll either just lay an offer to get short or they want to see it work a bunch of times. Both are not going to be consistent or allow you to get consistent, successful, and profitable in this business. Neither one. Laying an offer in the book because you're bearish at that level and you think you're just going to lay an offer naked and then have your OCO. Well, yeah, but I have an automatic, strategy runner that puts in a buy stop above and a buy resting bid below. Life is good because this is like 3-to-1 risk to reward, 3 times it. All that won't work. If I could teach in 30 seconds my 8-year-old, 9-year-old son that trade, and he could figure and put him in, how often it's not going to work. And he's pretty smart. Now, by 14, I've been saying this since my oldest son, who's 15, was 5 years old. Now he's 15. I could teach him a strategy because he's a high school teenage know-it-all. He'll screw it up. Why? Because we're just young kids. We're just old kids when we're adults. We have still some of the negative traits when we get emotional of what we had when we were teenagers. We know it all. We're too stubborn. We don't want to listen. So when you have a losing trade, you fit that profile. All right, so back to the point. Most profilers won't catch it there. They won't execute it there. And they'll finally get it here because they've seen it work so many times, and they're done. Or they did catch it here, but they didn't get out because they're looking for a home run with the bases loaded. They caught it here, but they didn't get out there. They wanted to catch it down here. They got in here, but they wanted to catch it down here. So they had winning trades. That's now a losing trade, and they sat through this emotional roller coaster, and that's no way to trade. You'll never go broke taking profits. You got to be good at scaling out. When the market gives you 4 or 5 points and you're a day trader and you don't take it, then you need to trade a little bit bigger so you can take it, because the market often does this, and it's no way to live if you're going to have a ride like this on a lot of your trades. Nice winners and the nice losers suck, and you're not going to want to continue to do this and remain passionate about it. So that's some of the weaknesses of profile. But other than that, it is a great way to learn. And I would actually tell people, you don't have to be an expert in it, but understand the basics of it, but also understand where profilers are weak, where they get trapped, and look to do the opposite. Find the obvious and do the opposite in any setup. You don't want to be part of the herd. Is my mic, hold on, I'm getting a problem with my mic. Do I sound okay? All right, well, good. We're still on the air, YouTube. If you're a YouTube guy that comes and watches, subscribe to it. You leave a comment. Give it a thumbs up. If you like it, let me know. Hopefully, Warren, it was just on your end where the sound went a little off. But back to this highlight. So that was, in real time, the bearishness call from here, be careful long, because of that Corona comment at 9:09 Central, about 9:07 Central, and then it got printed on our headlines at 9:09. We get it in real time. And then in here, let's drill down what happened in here. We had, and this is kind of a long highlight today, because I think even though we didn't have a big volatile day, a lot happened. Right before the open, about 5 or 10 minutes before we open at 8:30 Central, Trump comes out on the wire. He's talking in Davos and says about threatening auto tariffs on Europe if they don't get a deal. That's the first time in a long time I've heard him make that threat on the Eurozone. And look at what we didn't do. We didn't go down. What I say before the open, there's some underlying strength in this market because we can't go down, and we kind of should have when you're threatening tariffs on what could be U.S.-China trade war part 2. If there's some tariffs back and forth with the European Union and the U.S. So did I say, hey, buy it right on the open, we're going to go straight up 5-10 points? Of course not. But I did say there's underlying strength. Be careful. We can't go down, and we should. If you're not analyzing the news and knowing these clues, you're not going to be able to make these decisions that strip randomness out in these circles. So we, in fact, go up. What's the first time that we're probably exhausted up here? Number one, let's take that away, and let's blow this guy up. Let's back it off to... They expect to make a deal with Europe on auto tariffs. That just came across the wires. Right in here was the, was back in here. Here's the run-up, opening drive. We also had a lot of people that were bearish coming in because it was a gap open lower. You had the Trump comment that was bearish, couldn't break. So it was a bullish underlying strength type moment. We had some resistance, these 2 red edge zones. They chop around. The first moment of some chop was in here where some greens were getting breached. Some red selling was coming in. Below these greens, you can't be as bullish. Right in here, you can't be as bullish. And this isn't hindsight. This is as it's happening. And I told guys, we break out of the bottom of this, 22.5 is important. If we stay below there, the Bears have a chance to run it back down to this other area around 19.20, where it did a little two-step before it rallied right after the open. Why? If you watch any of the stuff that I have out there, what's the first or second thing I want people to look at when they look at charts? Consolidation boxes. Why? Because the middle is important. Why? Because that's where most people who might be long are stuck on average from. That's why it rotated back up here and then started to drag and drift lower. So if I draw this market strong, whoop-de-doo, everybody gets long late. Oh, it'll still go up. Oh, shoot. Well, let me get out and get long later. And they're baby birds trying to sell it, keeping this as overhead resistance, just plainly because it's the middle of a consolidation zone. But if your eyes aren't fixating on congestion boxes, then you're not going to pick that up, and you want to be close to knowing the middle of a box that could be good and could create good transitional moments, could create why you're bearish or bullish for reading the market and reading the price skill, not just randomness, not just a line in the sand, but real why moments. Why moments of why price goes up and down, how people get trapped, how markets get cheaper, expensive, and so on. So this is some really good stuff based on what we have coming into Tuesday. Feels like a Monday because of yesterday's holiday. I just want people to know that the drivers are really important. If you're not going to trade news right on top of it, well, that's fine. It's not fine, but that's fine for you. But it doesn't excuse you from knowing what's driving the market so you could follow price better, because that's what you're doing when you're trading price. You're following it. If you can't quote it, you can't follow it. If you can't follow it, you can't trade it. If geopolitical events and news events and earnings and fundamentals are driving the market, you can't follow those, then how are you going to trade something you can't follow? So you just work on getting better and better at the simplistic stuff that is not simplistic or basic to others. I learned this coming in from the floor and then a prop firm. So where I'm different than most people is, while I failed as a floor trader first before I succeeded as a screen trader second, I started learning the right stuff early on instead of getting distracted with a lot of stuff that looked like it was great but really wasn't. Get back to the basics. What's basic for me and what's basic for pros is not basic for most of the rest of the world. Subscribe to the channel.